Well, ladies and gentlemen, welcome back to the channel. We officially just got somewhat rugged by the Fed. Now, there's a couple different things the Fed said in particular, some of which is actually really good, but the markets are focusing on one thing in particular. That caused the S&P 500 to drop about 1.63% today. It's much worse than that for the NASDAQ or for what is most relatable to AMC, the Russell 2000. Believe it or not, AMC stock is actually outperforming when you look at AMC relative to other stocks. So what's going on here? What do you need to know in specific to AMC stock? Hit the like button as well as subscribe to the channel. Let me know what you think about this information down below in the comment section. So first things first, ladies and gentlemen, we got some work to get into. So Jerome Powell, young Pow, changed things up quite a bit. This is the statement that came out. Now, the biggest thing to really pull out of this is there was a lot of changes to the statement. So they took out the part of the U.S. banking system is sound and resilient. Tighter financial and credit conditions for households and businesses are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. The committee remains highly attentive to inflation risks. So it's pretty interesting they took out the U.S. banking system as sound and resilient. Maybe they think everyone's just over the banking crisis. At the same time, another New York bank dropped like 45% today because their losses are getting extreme. Nonetheless, they did take out that the banking system is sound and resilient. The biggest thing that the markets kind of paid attention to in this report is this part. The committee will continue to assess additional information and its implications for monetary policy and determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time. The committee will take into account the cumulative tightening of monetary policy, the lags in which monetary policy affects economic activity and inflation, and economic and financial developments. That was taken out. So additional policy firming was taken out. So it looks like the next move is going to be a cut. At least that is what the Fed did signal today, especially in the press conference, that essentially you would have to see inflation come up quite a bit to get the Fed to start cutting rates again. Now, what's actually interesting about the Fed is he made a couple different statements that are like, wow, okay. Number one, the thing that is really affecting the markets, it's best described in one sentence. Fed Chief Jerome Powell says a March rate cut is not likely. Yeah, he said that they didn't talk about cutting rates in March, that they want to be dead set certain that inflation is going to continue to fall, because when they start cutting rates, they don't want to stop and have to start, raising rates again if inflation were to rise. So they do want to be very, very certain that, we are on a path to 2% inflation. He says, quote, I don't think it's likely that the committee will reach a level of confidence by the time of the March meeting to cut rates, Powell said. And that's really what caused stocks to fall. What's actually interesting is 10-year Treasury yields are also declining by quite a bit, down about 14 basis points today. Because of what he actually said about the balance sheet. Now, usually Jerome Powell just answers questions off the top of his head. He doesn't have to read off of a paper or anything. Well, for this question, he did. He found the paper and started reading what it said. So he, if we can see. Let's see. Yep. Okay. So slowing balance sheet runoff in the months ahead. He was basically asked the question of if that's being talked about. He said balance sheet runoff so far has done very little as the process has continued. Questions are starting to be asked if the pace should be slowed. In March, we will be talking in depth about lowering the balance sheet runoff. Now, that could be by a lot, that could be by a little. Nonetheless, what that does is it takes less pressure off of TLT, for an example. TLT has been falling for the better part of 2 or 3 years now. You're back to levels, that are lower than pre-pandemic. And a lot of that is the Treasury as well. The Treasury is issuing a massive amount of debt to fund the government. But then you also have the Fed that's selling about $60 billion worth of Treasuries every single month. That is having a cumulative effect, both of those things, on pushing TLT lower. creating more unrealized losses for the banks and putting a lot of pressure on long duration yields like 10, 20, 30-year treasuries, keeping those artificially high. Because let's be honest, nobody really believes that rates are going to be, 4% 10 years from now. 10-year treasuries are just priced that way based on all of the selling pressure that you continue to see in the treasury market. So an indication that by March you could actually slow that down is, well, having a pretty positive effect on TLT. Now, what's actually interesting is this was one of the biggest, if not the biggest, lagged effects I have ever seen. I've never seen anything quite like this, where even when Jerome Powell talked about, slowing the pace of the balance sheet runoff, nothing happened with TLT. Literally, like nothing happened at all, right? You actually fell on that, which doesn't make a whole lot of sense to begin with. But then what happened? The last minute of trading, TLT had volume of almost 16 million shares, which is, that's off the chart volume for TLT. That's just ridiculous volume, right? That is double the volume that you've seen yesterday. That is triple the volume you've seen the day before. That most of that came in the last minute or so. And then what happened? TLT continued to rally about 0.5% in after hours. Thus, essentially, 10-year treasury yields, 20-year, 30-year treasury yields are starting to plummet. Very weird lag effect. It looks like maybe this is algorithmic trading activity, or maybe this is just some hedge funds or institutions that are like, hey, maybe it's now time to buy TLT, but apparently they didn't pick up on that when Powell was speaking. Maybe it was a fake out to get people out of some of those long positions. Who ultimately knows? But this is good news for markets because that means treasury yields are falling. Now, one of the more notable things that Fed Jerome Powell did say as well is we no longer need to see weakness in the economy in order to get rate cuts. Fed Jerome Powell says we thought we would need to see some weakening in labor and economic activity. We don't believe we need to see that anymore. We would like to see the economy and labor market doing well and inflation coming down. So this really pushes back on the narrative that you need to see higher unemployment, that you need to see a worsening economy. You don't need to see that. Powell made it abundantly clear. The only thing we need to see is inflation continuing to fall. Nothing else matters. So I do think that's ultimately good. I think it can create a dynamic where good news will start to be good news. And we've seen a lot of good news as far as the economy and the labor market and the amount of jobs that we are continuing to add. As long as what's been happening continues, I think the markets might start to look at good news as, well, good news. And that is definitely on a positive note as well. Now, something that's pretty interesting also that happened today is the last 10 minutes or so interesting. So let's see right here. MOC, this is market on close in balance, 7.2 billion to the sell side. That means there was a lot of orders towards the end of the day to sell stock. This is the last 10 minutes. All of the orders go through and they start getting processed in the last 10 minutes of the trading day. So definitely a high number there. I can't recall ever seeing a higher number than that. So that's maybe a little bit more bearish here in the near term. Now, we do have a little bit of good news that does come via Qualcomm. That is actually what we had up on the screen when this video started. Qualcomm did give us some good earnings. They did raise guidance by quite a bit, showing that, the phone market is starting to recover, and that should ultimately be good for who? For Apple. That is going to report earnings tomorrow. Apple is up about 0.25% following Qualcomm's earnings, and Apple, Amazon, and Meta report earnings coming tomorrow. And that's going to be one of the last major events of this week. We are going to have the non-farm payrolls and the unemployment rate as well coming out on Friday. But Powell is definitely going to be epically important for stocks, right? This. What we heard today with Powell, it usually takes a couple of days to kind of let things work through and for markets to figure out exactly what this means. I think if you really want to boil this down, I don't think it was as much of a necessarily rug pull. The markets were not pricing in a rate cut in March. In fact, the markets were pricing in the first rate cut in May heading into this Fed meeting. But it does kind of lower the odds that we'll see 5 or 6 rate cuts by the end of this year. Currently, if we look at what markets are pricing in for Fed policy, we do have 1, 2, 3, 4, 5, 6 rate cuts that are still getting priced into markets, which is kind of crazy that the odds are actually jumping today, because I mean, it didn't sound like Powell was in any kind of wasn't seeing any urgency to start cutting rates. But then again, inflation has been falling quite a bit. Markets may be saying, hey, if you don't need to see weakness in the economy, if just inflation continues to fall and that's enough for the Fed to start cutting rates, maybe the Fed's going to cut rates a lot by the end of this year, maybe 6 times by the end of this year, as long as inflation continues to fall. So I think that's pretty interesting. I think that does soften the blow a little bit, at least from some of the drop that we did see today. Maybe it's not all as bad as some market participants feel it is. Again, this TLT move is still off the charts crazy. The lagged effect here, definitely a strange one, to say the very least. Now, if we take a look at what's going on today with AMC stock, AMC is outperforming the markets. Like I said, AMC stock is still down, so I know a lot of people hate hearing that, but AMC stock is down about 1.22%, including the move in after hours. If you do take a look at what the indexes did today, Dow was down about 1%, S&P 1.61%, NASDAQ down 2.23%, and the Russell 2000, by far the worst, down 2.45%. So small cap stocks got beat up yet again. And really today was just broad selling across the board, but especially Russell stocks got it handed to them on a silver platter, okay? Now, AMC stock, in spite of that, did pretty dang well. You would expect to see AMC down at least 5% if the Russell was down almost 2.5%. You would expect a 2 times, underperformance, and that just did not happen today. AMC was actually down less than the Russell 2000. So I do think that is a little bit of good news. Now, if you take a look at the option activity here expiring by this Friday, you have volume to the call side of 84.13%, volume to the put side of 15.87%. So looking good there, as well as the hedge fund institutional option activity for this Friday. You do have 3 orders totaling $252,000 with a positive order value of 86%. So definitely on a strong note, considering yesterday you had a positive order value of 0%, and over the past week you have had a positive order value of 44%. So definitely weirdly strong for AMC. Short interest percentage of free float continuing to rise marginally on the day today. You're now to 11.02%. This is actually up from 6.5% 3 months ago. So you're up about 69.5%. As far as short interest percentage of free float. $113.49 million worth of short positions in AMC stock. Days to cover 1.48. 27.61 million shares currently sold short. Shares out on loan 27.27 million. Cost to borrow 1.09%. Utilization 41.83%. And a short score of 60.88 out of 100. Now, again, big story for tomorrow is all going to be about the earnings. Altria, Royal Caribbean, Peloton, Merck, SiriusXM, Cardinal Health, Honeywell, Tractor Supply Co., and Stanley Black & Decker tomorrow morning. Big dogs in after hours, Amazon, Apple, and Meta that will be reporting earnings, as well as some other notable names like Skechers, Deckers brand, and Microchip. Now, Friday pre-market, ExxonMobil and Chevron will report earnings, as well as Bristol Myers, AbbVie, Cigna, and Regeneron. So still a lot more volatility to go throughout the rest of this week. We do have the labor report that comes out on Friday, and that's also going to be a very big deal. So keep that on your radar as well, guys. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.